Greetings once again. This is the fourth topic from section 1 winter, and we call it budding and flowering. So, in this topic, we will be talking about the sentiment analysis and fundamental analysis. Okay, inside here, what we're going to talk about is we're going to extend our discussion about price movements because sometimes movements will go as predicted, sometimes it may seem random, and yet sometimes you'll swear it is orchestrated, okay? But all this is technically somewhat correct, but we wouldn't call it orchestrated, we wouldn't call it predictive, we wouldn't call it random. The correct term is it is manipulated. So you can read all of this yourself, but let's just jump directly into the topic, which we first start with sentiment analysis. So over here you can see sentiment indexes, okay? So what are sentiment indexes? The first one that you can actually try to identify is speculative sentiment index, also known as SSI. And besides that, you can also research into currency meters. So this actually identifies the bias of the current market, whether the bias is bullish or whether the bias is bearish. Is there more buyers than sellers, or is there more sellers than buyers? But over here, I'm pretty sure that most of you actually know that buyers doesn't necessarily move the market up and sellers don't necessarily move the markets down. The next one that you can actually see is forums and communities, because in forums and communities there are a lot of traders making their own sort of analysis, and over here they will actually set a bias. So if you're in a particular community and you say the market is bullish, therefore the sentiment of everyone in that community is to be bullish or bearish based on everyone's technical analysis. The next one is there is actually a number of indicators that can actually help interpret the market bias. Okay, this is if you are looking for bias, but here in MINTEDSEED we don't look for bias, we look for supply and demand. We look where the orders are located. And the last one would be price action. Okay, so the whole reason for us to actually put in price action into this, it is not because there is some way to actually identify the sentiment in price action, but the whole reason why we actually placed it inside here is because of probability. Okay, let's talk about probability a bit. Let's say prices are making higher highs and higher lows. This is an uptrend, and for lower lows and lower highs, this is a downtrend. So there is some sort of probability which you can actually make it applicable to your trading. This is if you are a price action trader, but here in MINTEDSEED we are trying to actually open up your eyes to actually see liquidity and orders. Okay, so over here you can actually look into this particular topic, particular slide right here. You can actually go through it yourself, but if you read at the bottom right there, everything written there is actually just an assumption. The truth of all of it is supply and demand. Okay, if you want to have a bias, your bias must be based on supply and demand. Your bias must be based on where the orders and liquidity is located. So now let's jump into fundamentals. Okay, fundamentals. I used to say this quite a lot before this, and I still sometimes say it right now. What is fundamentals? Whenever people talk about trends, right? Trends. The trend is your friend, and they'll tell you about uptrends, they'll tell you about downtrends, they'll tell you about sideways trends or ranges. So if you actually want to identify the trend, you don't actually look at the charts, you look at fundamentals. So if the news is good, then the trend is bullish. If the news is bad, then the trend is bearish. Eventually prices will balance itself out and go the intended direction. Okay, So most of the time we will actually use fundamental analysis to complement our analysis, as we can actually use it to grasp the economy and strength of the currencies we are trading. So over here you can actually go through all of this yourself, this particular slide, because I actually want to tell you guys something quite interesting that happened a few months ago. Okay, one of the persons, there was actually a participant that actually got the benchmark series, and he was actually asking me, how do we actually trade the news? Okay, honestly, do I trade the news? Yes, I do. That is only if the spread allows it. All right? Okay, because when actually some of you, I'm pretty sure that some of you have actually traded the NFP, and before even prices hit your stop loss or your take profit, you were actually stopped out. You're like, hey, you're telling yourself, hey, prices did not even reach this level. Why was my trade closed? This is because the spread actually increased. Okay? Why did the spread increase? Because of imbalance. Because there was not enough liquidity. It was not about momentum. It is not your broker trying to cheat you out. It's because there was imbalance. So what is the truth of fundamentals? Okay? So, can we actually trade the news? This is the age-old question that baffles traders all around the world. Okay? And this is what I actually want to ask you guys. Why do you want to trade the news so bad? Why does the NFP intrigue you so much? Okay? And we actually found the main cause of all of this. It is because in the NFP, many of you have seen traders earn so much money. Or you have seen traders lost their whole accounts, and you're thinking to yourself, if only I knew the right direction, I could be rich in a day. This is why many people want to trade fundamentals. It's not because they want to know the market's direction, it's because they want to get rich quick. Okay? And there are three techniques of trading the news which I don't apply and I don't recommend using. Okay, the first one is the straddle strategy. Okay, what is the straddle strategy? Is that you are going to place a buy stop above the current prices, and you're going to place a sell stop below the current prices. And when the news actually moves, either one of these stops will get hit. And this is the problem of this strategy, because sometimes prices will make a whiplash, meaning that it will go up first and then it will go down. It will stop you out both ways. So try to do some research on this. I'm not going to talk about it much because it's quite useless. Then there is the hedging strategy, where just before the news release, you execute a buy and sell order at the same time, which is very risky also. And the last one is the sentiment guessing strategy, where a group of you will sit down together and you'll try to guess the results of the news, and yeah, sometimes you get lucky and sometimes you don't. Okay, so let me actually introduce to you how trading fundamentals actually work. But before we get into it, I want you guys to go to the previous topics and you'll actually find this particular slide, which is candlestick structure. So I'm pretty sure most of you actually have been through this slide already. I wouldn't actually emphasize about it much now, but you can actually see the candlestick. The candlesticks actually represent supply and demand, not buyers or sellers, not bulls or bears. It represents supply and demand. And you have to truly understand how candlesticks actually work. Only then we can jump into fundamentals. So these examples are for bullish news, meaning that it is good news for the currency pair. All right? So over here, we have actually identified during a bullish news release, vice versa for bearish, only that prices will move in the opposite direction. During a bullish news release, price will move up. Sounds simple, right? But there are three scenarios that happens before prices may go into the intended direction. The first one is the one way, the wrong way, both ways. And both ways we have two types, okay? So the first one right here is the one way, okay? When the news is released, prices may move in one way, okay? So let's assume that point right there, that gold circle right there, you can actually see that it is in between of the balance and in between of the demand. So currently now it is sitting in the area of demand. All right. So what actually happens? It moves down just a little. Sometimes it will not move down. Why wouldn't it move down? It's because it's very close to the demand. So prices were already in the area of demand, and there was enough demand to break through all of the supply. So sometimes there will be no pullback, but over here I drew a little pullback, which is what price action traders would love to call a trap. So little to no pullback will occur, and therefore prices are most likely to move one way. Okay? So if supply was already collected a number of times in the past, then prices will not have to return to the balance. It would just move one way up. Okay? So this is the scenario that most traders actually want. Why do they want this scenario? It's because if good news happen, all they need to do is to click on buy and they will be in profits. And that brings us to why a lot of traders actually get trapped, because what actually happens is not always the one way. Sometimes it is the wrong way. So why does the wrong way actually happen during a bullish news release? All right. So now, if you look at the circle again, you can actually see the circle is in between the balance and supply. So currently now, current prices just before the news release, it is within the area of supply. Okay. So now, what actually happens is supply needs to be cleared first in order for the demand to exceed it. Okay, so if supply is not cleared, demand cannot exceed it. This is why during a bullish news release, many traders start buying. They buy, but all of a sudden they were actually speculating prices to move up. But what actually happened? Prices moved down. Why did it move down? Because demand had to be collected first. Okay, so first the supply was actually cleared. That's why prices moved up, and this is why all the traders were jumping in. But suddenly prices shot down. Why did prices shoot down? It is because once supply was fully cleared, then prices had to collect demand first. All right, and besides collecting the demand, it had to collect the balance of orders. Okay, so if supply was not that much, therefore prices will actually just move until the balance. But if supply was too much, the only way to balance out or clear the supply is demand. Therefore prices actually shot down to clear off all the demand. Once demand was cleared, prices will actually move up. So if imbalance is too high, the conclusion is if imbalance is too high, then more demand orders are needed. So a sharp down move may occur. So this is what most traders will think that, oh, why is prices moving the wrong way? I thought that the news is good. I thought it's bullish news. So prices should actually move up. Yeah, correct. You are right. Prices will move up if demand is first collected. Okay, and the next one will be both ways. Okay, sorry, over there I write there both ways type 2, but this is both ways type 1. Okay, so this is the whiplash. Okay, what actually happens in the whiplash? This is when prices are sitting in the middle. Okay, it is not in the area of supply, it is not in the area of demand, it is in the area of balance. So when the bullish news, when good news actually happens, what actually occurs? Prices will move up, okay? But if there is too much supply or sell limits, therefore it all had to be cleared first. So when all the supply was cleared, prices will actually make a plunge down, okay? So supply was cleared first. This happened to clear all the limit orders, and prices then head to the demand, okay? So most traders will actually misunderstand this as a bull trap, but it's not a trap. Prices just had to take demand first. So the down move was actually to collect demand. It had nothing to do with a bear trap. So once demand was collected, what actually happens next? Prices will then move up. And if you watch here correctly, if you understand how prices move and you understand a lot about candlesticks, what candlestick can you see in this movement? There is actually a hammer candlesticks. And the problem is many newbies will actually think that hammers represent rejection. They will think that, the bears were rejected from going lower. But they've actually failed to understand what is the true price action behind the hammer. And the next one we'll go into is the both ways scenario, type 2. So previously the hammer was type 1 and this is type 2, which is known as the doji. So same scenario, prices are actually sitting at the balance. So what actually happens? Good news comes. And when good news actually comes, the prices did not actually have to clear supply because probably just before the news release, supply was actually already cleared. Okay, so therefore prices actually moved down to collect demand because demand clears supply. The balance was not enough, therefore more liquidity was required. So liquidity is balance and equilibrium. Equilibrium equals the balance of the ask and bids. Okay, so do you actually still remember what's a doji? We'll reveal this soon enough. So prices actually head down. And why did actually price head down? It's because demand was collected first. Now demand, including the balance, exceeds the supply, okay? Exceeds but not enough because supply was also cleared too. This happened to clear the limit orders so that the demand may break through it, okay? So this is sometimes previously was known as a bear trap. This is a bull trap because why? When buyers actually enter, prices fell, okay? Why did prices fall? Okay, so this shows that all the bulls were trapped, they were stopped out because the third thing that actually happened was the balance had to be taken first because there was actually too much supply. Although balance and demand was already taken and supply was cleared, so therefore demand will exceed supply because in this consideration the balance and demand are both where the orders are located. So in this particular example, balance and demand make up the demand cluster. Therefore, after this move, prices will then shoot up. And can you actually see the movement of a doji candlestick? Let me show you it right over here. Okay? So this is what we actually call manipulation. Alright? So, is the market orchestrated? Okay, so this is the biggest controversy of the market. Of course it is orchestrated. Of course it is manipulated. Okay? But it's not intentional, okay? The institutions are not actually thinking that. The institutions are actually not thinking, let's trap out these retailers, okay? They're not thinking it in this way. They're thinking of it in terms of supply and demand. They're looking at, hey, guys, look, there are orders right there. Why not we take it? And that is where all the support and resistance price action traders stop losses are located. All right, they always place their stop losses at where the orders are, and they get stopped out, and they actually blame the institutions. Oh, it's all orchestrated. Of course it is, because you do not know where to place your entries. Okay, so you can actually read this all yourself, and maybe to you, maybe some of you may not really understand this, but maybe some of you, the reason why this may not seem very mind-blowing to some of you, it's because some of you may not understand the whole concept. All right, but once you actually understand the concept, you can actually start trading the news very accurately. Okay, you can actually read all of this yourself, and I think this is it. Oh yeah, before I actually go on further, I will actually be placing some technical roadmaps. I will actually make a video about a discussion to discuss what I was actually talking about in the group chat. Okay, so what was I talking in the group chat for the past week was just before the NFP release. I was actually talking about uh, the gold and US dollar pair, and I actually found something similar on Euro USD. So we will actually make a discussion about that and what actually is going to happen in a roadmap and technical analysis. And this is all based off what you actually just learned in this topic, and also some applications on. I'll actually discuss it in terms of fundamentals. Okay, so I'll see you in the next one soon. Thank you.